Alrighty folks, we got a lot to go through in this video. Let's jump straight into it. So NASDAQ is now down about 22% from its peak back in November. This has just been a devastating move to the NASDAQ, and you rarely see the NASDAQ sell off this hard. It might happen every few years or something like that, but it's just been a vicious downward move for the NASDAQ 100, and really it's shown no signs of a bottom as of yet. It's just kind of, continues to downtrend and downtrend with no, real support upward so far. The Russell, if we go ahead and take a look at the Russell's down about 21% from its peak back in November as well. And this one is just, continue to get devastated. The Russell 2000, think of that as small cap stocks, okay? Yeah, it's been pretty darn devastating out there, and I think the overall message in this video is going to be, 2022 is the year to be a buyer of stocks and not a seller of stocks. And basically what I'm going to take you through in this video is I'm going to show you a lot of what's going on out there. We're going to look at past history, how long these drops usually last for, and why you have to, in a year like this that you get given where folks are just flooding out of stocks, you have to take a year like this as an advantage year to be a buyer of stocks and take advantage of these deals, because you don't get years like this very often. Let's put it that way, okay? Now, if we go ahead and we look at, let's call it the retail trader names today, they're just getting absolutely, devastated here today. And the smaller the company is, the worse it is, okay? And, the disappointing day about today, and the kind of the sad part is, this isn't Wall Street didn't do this. This is retail's doing this to retail essentially today, where, folks saw massive YouTubers selling out all their stocks, and they're like, all but pretty much one of their stocks, and they're like, dump everything, dump. And when you dump all your shares at the same exact time, it's going to cause such a massive, move out of all those stocks. You can't get the buying pressure there. And a lot of these stocks aren't supported by major indexes or ETFs or things like that. So if you just have a flood out of the stock all in the first few hours of trading, those stock prices are going to go down massively. Now, the good news is, there are certain companies that are obviously have a ton of bright things in their future, right? And those companies will go on to thrive, and the buyers of those will make a ton of money. But at the end of the day, we can't deny the fact that there's massive amounts of retail selling today, and just kind of sad, honestly. Tesla got hit 3.6%. A lot of retail holds Tesla. The good thing for Tesla is such a big market cap now that a lot of big money holds it, so it doesn't get devastated quite as hard. Palantir, it's a fairly big market cap, but still, Palantir is so controlled by retail that if everybody wants to dump at the open, and sell out in mass, you look at that stock, almost 8% downward here today. Obviously, AMC's, very, very heavy retail, but the one good thing for AMC is it's one of the biggest weight holdings in the Russell 2000, actually. So even when folks just want to dump AMC on the market on an open like today, at least it has some sort of support there. But that one 5%. GameStop, almost a 16% move down for that one. Clove, look at this one, about a 14% move. The Hood, pretty soon you're going to be able to sign up for the Hood and get the whole company for free or something like that. Look at this. 3% downward move there. Coin down 4%. The Chef down 9% here today. It's a straight retail stock, right? And if retail just sells, you can't get the buyers in there fast enough to even buy the stock up, and it just has a vicious downward move. ARK obviously massively down today, about 6% there, and yeah, it's just if retail wants out, they flood out, right? Look at Wish here today, down over 5% there. C3AI, another retail stock, 6%. And you can look at all the big retail stocks and all the big YouTube stocks, right? All those just got absolutely obliterated today at the open, and basically, several hours after trading, people just flooded out of those stocks left and right. It caused more people to flood out, and I would call it more sad than anything. Obviously people are going to be picking up these stocks now on the cheap, and be happy that, fellow retail sold them off in mass this morning. And, a lot of those folks, depending upon the stock, could be very happy in future years. But it's sad that just that flood out, and after these stocks had been so devastated. That's the worst part. It's not like these stocks are at all-time highs and 52-week highs, and it's like, okay, guys, now's the time to cash because, everybody's made so much money. These stocks have already all been killed like 70, 80, 90%. And just to see this last vicious move is honestly just a little sad. You look at a lot of these other ones. Look at Atom, Stitch Fix, Lemonade, Palantir once again, SoFi, another huge retail stock, right? That one just doesn't have that big money support yet, and down 7%. Look at Teladoc, another big retail stock, down 7% here today. Square's got big money and retail in it, 7%. Fubo's huge retail, big money's not in that stock yet, 6.5% there. Shopify's a mix of retail and Wall Street, 5.8% there. Uber about 5%, Purple 4.7%. That's a heavy retail stock there. MU's a mixture, okay, and Upwork down over 4%. Just honestly, a sad day. That's the best thing I could say. Just a sad day. And it's unfortunate. And like I said, some folks will pick up some of these companies on the cheap and be happy buyers throughout 2022. And other folks are just making those decisions to sell out these stocks down, 70, 80, 90%. It is what it is. It's the sad part of the market. This is the sad part of the market we're going through right now. The Russell. So if we look at I wanted to pull up, because a lot of people don't know how long these big drops last for, okay? So if we go throughout history, I think that's going to teach us some things. First off here, important drop in 1998. This was prior to the last climb up in the tech bubble, but Russell made about a four-month big drop in 1998 there, okay? That was the first one. These are all modern drops, essentially. No, we had a vicious drop in the tech bubble, but this was an interesting drop. So this lasted 2 years and 6 months, this drop, okay? From 2000 to 2002. 2 years and 6 months this drop in the Russell lasted. But the interesting part is in this drop, it had some big spikes along the way. So it wasn't like it was down in a straight line. If you look at the Russell over the past, 4 or 5 months, it's down in a straight line, right? Like, the ups are very low. It's just kind of down in a straight line. This kind of lasted so long because it was such a lame kind of drop. And you had all these big spikes up and big spikes up and big spikes up. And then finally you had this kind of capitulation sell-off here that everything just kind of went down. So it was technically a 2 year, 6 month drop. But let's be honest, it was really the real drop happened here. And that's where the bottom fell out. Before that, it was just kind of playing around. That's all it was. And so that was an interesting one there. We had a 1 year, 10 month drop in 2007 through 2009, essentially. And this was a moment in the Great Recession where stocks sold off, and they sold off for good reason, obviously. Massive jobs were lost during that time. It was economic devastation. We almost lost the entire financial system. It was a most serious, financial related thing to happen in the United States of America since the Great Depression. Let's be quite honest about that, okay? And so from 2007 through 2009, you had a 1 year, 10 month drop in the market where the Russell fell over 50% peak to trough there. And this was just a vicious kind of fall because this was already a pretty big fall over that first year or so. And that last bit there was just awful from, Russell was about 720, 730 to next thing you know, Russell was trading, around 400 or so. Just a vicious last kind of capitulation sell off. That last, it's called 6 to 9 months there was just vicious. And that was a 1 year, 10 month drop there. Here in 2011, we had a 5 month drop. This was double dip recession fear. And, every once in a while, the market goes through these time periods where it worries about, double dip recessions and recessions in general, things like that. Also the Fed and what the Fed was going to do and quantitative easing, what was going to happen there. There's a bunch of different fear in the market. Kind of a little wall of worry built itself up. And we had kind of a vicious 5 month drop in the Russell where the Russell ended up falling, over 20% there for 5 month span. In mid 2015 through early 2016, we had an 8 month drop roughly. And this was one that just kind of, the bottom fell out, then we bounced back, and then the bottom fell out again. And so for 8 month span from mid 2015 to early 2016, and that was painful. I'll be honest. I was in the market, obviously, and that was a painful drop. I definitely got tore up in 2015, and a lot of the reason I got tore up worse than I would have is because I tried to trade in and out of the market, and next thing you know, I was all out of stocks, and then I even went into gold for like a 3-day period. Like I was just doing stupid stuff, and I was in and I was out, and I was like, oh, let me try to trade this market because it's rough. And so I was in the market, I was out of the market, then I was in the stock, and then I was heavy in this stock, and I was doing these earnings trades, and oh my gosh, it was a disaster. And instead of just like sticking through and either buying the dip or just holding through that moment, I was in and out, and I was a hot mess, man. That's all I can say about it. It was a hot mess, and I got torn up in that market, and it was kind of a nasty market for that 8 month drop there. Then we go ahead and we look at 2018, so there was a late drop in 2018, in the back half of 2018, and we ended up bottoming right around the end of December, essentially. And for the Russell in that market, it ended up falling like at the peak to trough in that 5-month span. I think it was around a 27% drop. It was nasty, man, and I got shredded in that market. Yeah, it was a vicious drop. I remember at one point, I think almost every stock I held was down at one point. It was awful, and so that was a very vicious drop. It lasted 5 months there for the Russell. And then we had the 3-month Rona drop, very, very strange situation where the bottom of the market fell out and all the indexes went down 30% plus, but then they came back extremely fast. I mean, extremely fast. So it was a very interesting market dynamic at that time because there was a lot of fear in that March of 2020 that, we were going to have the global economy closed for years potentially, right? That was a thought process. And so very strange how, I don't want to say it was strange how fast the market dropped, because that was almost, warranted given kind of what was the situation at hand. But I think that the comeback was the strangest thing. Like how fast stocks came back over that next 3 to 6 months was actually pretty darn amazing. And so that was a 3-month drop. Okay. And so what we're seeing essentially is, in what we could, if I would have pulled up the Dow, the S&P, the NASDAQ, you would have seen much of the same. The only difference is usually sometimes the Russell will fall first, and then the NASDAQ follows after that, then the S&P 500 follows after that, and the Dow follows last. Sometimes one of the indexes will go forward a little more than the others, but essentially if I pulled up any of the other big indexes, you would have seen the same exact thing, okay, roughly. So what we know is usually these drops last anywhere from let's call it 3 months to 8 months, outside of a very strange scenario where the market just grinds lower for like a year or two. It's not the market we're in right now that's falling off a cliff. Let's be quite honest. It's a vicious fall. So in those sorts of markets, you're usually going to get about a 3 to 8 month drop roughly, right? And as far as where we're at right now in the Russell, and this has just been a vicious kind of, bottoms falling out type drop, we're at a 4.5 month drop because the market topped out in early November, and here we are in kind of mid-March. So we're almost 4.5 months into this current drop now, roughly, and it's just been vicious. And the Russell is down about 21% as of right now, and that's just kind of a fallout moment in the market. So it doesn't mean it can't go for another month or two, or even 2 or 3 more months or something like that. But what we do know is when you get these vicious drops, the recovery happens much faster than if you kind of just get a slow grind down. So if you want some sort of good news, that's definitely some good news. So I got some more good news. The oil market is coming down a lot, okay? So last week we peaked at about 130 for oil, and here we are today trading about 101. So oil's dropping, and it's dropping fast. Don't get too excited. Don't expect that to stay like that. But nonetheless, and that's the unpredictability with commodities. And I know I was talking with a lot of folks, right? Last week they were like, oil by, next week's going to be 140, 150. Just, wait, it's just going to keep pushing. And here we are, 130. And today we're at 101. And that's commodities. You want to talk about something that's impossible to predict? Try to predict commodities where they're going over the next 1 month, 3 months, 6 months, 12 months, 18 months. It's an impossible game to play. That's what I have to say about that. Unless you get such a massive move up that it becomes unrealistic, or such an insane move down. Like, when oil went negative, for instance, that was a good time to potentially buy oil futures or something like that, because you knew that wasn't going to last, right? That was too far out of the ordinary. But, most of the time when oil's trading in a normal range, dude, trying to play a guessing game on that is a near impossible thing. It's ridiculous, right? So now, what have we seen in the market, right? Well, we've seen big YouTubers selling. We've seen the AAII sentiment go massively negative, where far more investors are bearish on the next 6 months in the market versus bullish and neutral combined. We've seen the Russell and NASDAQ now in bear market. They're both down over 20% from their highs they reached. Obviously, Dow and S&P are in correction. Not just that, but think about this for a moment. If you pull up any of the European indexes, all of them are either in correction or bear market or have basically crashed, okay? All of them, just absolutely vicious. They've all gotten absolutely shredded, okay? We've seen fear everywhere right now. The wall of worry is massive. It's like the Great Wall of China, okay? We got inflation fears. We've got Russia and Ukraine. We've got oil, right? Which the only good news is oil is coming down, right? We've got, obviously, a ton of commodities have spiked huge. You got the Fed fear. This is a fear-driven market, right? And so when I look at this year, 2022, let me speak on this for a moment. By the way, check out pinned comment down there for my 15-part stock picking checklist. It's absolutely free. Text a number and we'll send it over to you. It's pretty dang awesome, okay? So when I look at 2022, this is a no-brainer year to be buying stocks and buying your favorite stocks and buying your favorite stocks. And I look at this year, and here's the thing about this, right? Is I look at this year as an entire year where you can just buy and buy and buy and buy. Because so many of these stocks have been hit so far to the downside that whenever they do start to bounce back, it will still be a huge buy the dip opportunity. Just because some of these stocks might bounce back 5, 10, 15, 20% does not mean they're still not a steal deal, because some of these stocks are still going to be a massive steal even after they start to bounce, essentially, okay? And there'll be a ton of money to be made. So that's why when I look at a year like this is just like accumulate. And the right way to look at a year like this is if other people want to sell you their ownership of companies, that's exactly when you need to be a buyer of those companies, the ones that are quality, that have, great 5-10 year out futures in front of them, right? That you've done the full research in. Because right now, on a day like today, that's retail just selling out. Your fellow retail shareholders are selling you en masse, right? And, that's just a crazy opportunity. If Wall Street wants to sell off the big guys, like the PayPals and the Facebooks and the Googles and those sorts of companies, Amazon, you got to be ready to take advantage of those deals as well. This is a full year you're going to get to be a huge buyer of stocks and accumulate as much ownership in companies as possible. Because I can tell you, once this fear is gone, you'll have future fear, but I can tell you this amount of fear in the market is an abnormal amount. And you have to buy into the fear. And I know it's hard to buy into the fear. And when everybody's selling out and it's like, oh my gosh, the indexes are down 20+, it's so much easier, especially if you're newer to the market, to buy stocks when there's a lot of FOMO in the market and everybody's excited to buy stocks, right? But I can tell you, that's the worst time to buy stocks. And right now, this year, we got right in front of our eyes right now, this is the year to be a buyer of stocks. And you have to buy into the fear. And I don't mean buy in as in believe in the fear. You have to buy stocks into that massive amount of fear. And I don't care what happens, you buy, and you throw it in the filing cabinet, and more fear comes, you buy and you throw it in the filing cabinet. And the more the market sells off, the heavier you buy, and you just got to be willing to take advantage of all those deals this entire year. Because I tell you what, these drops in the market, these sorts of years we have going on right now, doesn't last for long, man. It doesn't last for long. And then next thing you know, the money comes in, the money swoops in, and next thing you know, these stocks start making big moves up. It happens quickly. It happens more quickly than I think a lot of folks even realize. And that's what will happen again, as always, unless you're a perma bear forever and you think the market will grind down for all of eternity. Outside of that scenario, buy stocks and buy stocks and buy stocks and buy stocks. In 2022, this is the year to just be an accumulator of companies and increase your ownership as much as possible for 2023, 2024, 2025, and all the future years, okay? Much love as always, guys. Hope you enjoyed this video. I appreciate you joining me on a day like today where it's just vicious out there, and have a great day.